I've been in the business of compounding capital and compounding wisdom for over 70 years. I saw my first million well after I turned 40, and my first billion when I was old enough to be a great-grandfather. You want to know the difference? The real difference between the first number and the second? I just stopped doing stupid things. Everyone is looking for the secret, the magic formula, the one stock that will change their life. They're chasing complexity. They think the answer must be hard to find because the problem seems so big. There is no secret. There is only a short list of advantages, unfair advantages, that the wealthy and the wise use every single day. They aren't about what to do. They're about what not to do. It's a framework for avoiding the stupidity that sinks everyone else. I have seen brilliant people with IQs that would make a computer blush, financially ruin themselves. And it's always for the same handful of reasons. Today, I am going to give you that list. The 7 unfair advantages that are really just 7 mental models for avoiding self-destruction. Pay attention. If you're guilty of even 3 of these, you're already a decade behind where you should be. We start now. Advantage number 1, and it's the most important one. You're using it backward. The first unfair advantage is inversion, and you are trying to be brilliant. Wrong. Completely and utterly wrong. This single idea is so powerful it makes me sick that they don't teach it in every school. You are sitting there, asking, how can I make a lot of money? Or, what makes a business successful? I don't do that. I'm not smart enough to know the single path to success. There are too many variables. Instead, I ask a different question. I ask, what would absolutely guarantee failure? What would kill this business? What would bankrupt me? What are all the ways I could end up poor and miserable? And then, I just avoid all of those things. It's a much lower bar. Don't try to be a genius. Just try to not be an idiot. Think about long-term capital management in the 90 seconds. A room full of Nobel Prize-winning economists, literal geniuses, who created a formula to make money. They spent all their time figuring out how to be right. They never stopped and seriously asked, what is the one thing that could make us completely wrong and wipe us out? And then it happened. A simple Russian bond default, something their perfect model said was impossible. And they were gone, vaporized, because they were trying to be smart. Instead of trying to not be stupid, you're trying to build the perfect boat. You're focused on the engine, the sails, the beautiful paint job. I'm just looking for the icebergs, and I steer the other way. Here's your rule. Before any major decision, financial or otherwise, stop and write down all the ways it could go catastrophically wrong. Your homework tonight, take your biggest goal. Write down the 5 things most likely to make you fail. That is your new to-do list. Avoid those 5 things at all costs. Advantage number 2. You are a specialist in a world that demands generalists. You're a one-trick pony. The unfair advantage is having a lattice work of mental models. This drives me crazy. You have a man with a hammer, and to him, every problem looks like a nail. You're an accountant, so you see everything through the lens of a balance sheet. You're a marketer, so you think the answer to everything is a better slogan. Insane. This is an insane way to live. The real world is a complex system of overlapping forces. You can't understand it with one model from one discipline. I don't think like a stock picker. I think like a biologist, a psychologist, a physicist, a historian, and an engineer, all at the same time. I want to know about evolutionary biology to understand competition. I want to know about cognitive biases from psychology to understand my own stupidity. I want to know about thermodynamics to understand the conservation of energy and resources. Look at the fall of Kodak. They were a chemistry company. They invented the digital camera. They invented it. But they couldn't see the world through any lens but their own. They saw themselves as being in the film and paper business. They couldn't use a psychological model to understand how consumer behavior would shift. They couldn't use a technological model to understand the exponential curve of digital progress. They had one hammer, chemistry, and the world handed them a screw, and they went bankrupt. You spend 4 years learning one thing in college, and then you spend the next 40 years applying it. While the world completely changes around you, you're a sitting duck. Here's your test. Can you explain your investment using a principle from a field outside of finance? Can you explain it using biology or psychology? If you can't, you don't understand it well enough. Your homework: pick up a book on a topic you know nothing about. Biology, psychology, history. Read it. Start building your lattice work. Otherwise, you're just a man with a hammer, waiting for the world to become a screw. Advantage number 3. You are spreading your money around like you're feeding pigeons in a park. The unfair advantage is asymmetric betting. You've been told to diversify. It's the one piece of financial advice everyone knows. And for most people, it's not terrible. It's a way to protect them from their own ignorance. But it is a guaranteed path to mediocrity. I don't look for 100 mediocre ideas. I don't even look for 10 good ideas. I look for 1 or 2, maybe 3, truly magnificent ideas in a decade. Ideas where the upside is enormous and the downside is manageable, where I have a massive informational or analytical edge. And when I find one, I bet heavily, very heavily. It's not about how many things you buy. It's about the overwhelming quality of the few things you choose. Look at the average investor's portfolio. It's a zoo. 100 different stocks. A dozen mutual funds. A little crypto on the side. They own a piece of everything, which means they effectively own the market. They will get the market's return, minus fees. It's a recipe for going broke slowly. You spend a week researching a $200 television, but you'll throw $5,000 at a stock you heard about from your brother-in-law because it has a cool story. This is financial suicide. The rule is simple. Your portfolio should be able to fit on a single post-it note. If you have more ideas than that, they're probably not great ideas. Your homework: look at every single thing you own financially. For each one, ask yourself, is this a truly exceptional idea, or is it just something I own to feel diversified? If it's the latter, sell it. It's dead weight. It's diluting your best ideas. Advantage number 4. You are learning from your own mistakes. The unfair advantage is learning from the mistakes of others. This one is so simple it's almost insulting. But almost no one does it. You think the best teacher is experience. Wrong. It's the most expensive teacher. It's the slowest teacher. Why would you insist on making every mistake yourself when history has already laid out a complete roadmap of human folly for you to study for free? I don't want to learn that leverage can kill you by going bankrupt myself. I can just read the story of long-term capital management. I don't need to learn that speculative manias always end in tears by losing my life savings in the next bubble. I can just read about the South Sea bubble of 1720 or the dot-com bust of 2000. It's the same story, the same human psychology, the same greed and fear. I read hundreds of biographies. I read constantly. Not because I'm looking for secrets to success, but because I'm looking for patterns of failure. Success is hard to replicate. The variables are too complex. But failure is usually simple. It's leverage, it's ego, it's greed, it's envy, it's cutting corners. You are walking through a minefield, trying to learn where the mines are by stepping on them. I am standing on a hill with a pair of binoculars, watching where other people step, and I'm just not going there. The rule: for every hour you spend looking for a new investment, you should spend 2 hours reading about a past failure. Your homework: go online. Find a detailed account of a great business disaster. Enron, WorldCom, Valiant, WeWork. Read it from start to finish. Internalize the stupidity. You will learn more from that one story than you will from 100 success stories. Advantage number 5. You are playing games you can't win. The unfair advantage is operating strictly within your circle of competence. This is about intellectual honesty. It's about knowing what you know. And more importantly, knowing what you don't know. The world is full of people who are trying to be experts in everything. They have an opinion on biotech, on software, on emerging markets, on oil futures. They're confident, and they're almost always wrong. I have a very big too-hard pile on my desk. Most things go into that pile. A new social media company, too hard. I don't know how to value it. A complex derivative strategy, too hard. I don't understand all the moving parts. A biotech firm with a promising but unproven drug, too hard. But a simple company, like one that sells soda or insurance, that has been around for 50 years, has a strong brand, and generates consistent cash flow, that I can understand. That's in my circle. Warren Buffett famously sat out the entire dot-com boom. People called him a dinosaur. They said he'd lost his touch. He just said, "I don't understand those businesses." He wasn't saying they were bad businesses. He was just saying he didn't know how to value them. He stayed in his circle. And when the bubble burst, he was holding all the cash, ready to buy the ruins for pennies on the dollar. You are swinging at every pitch. You feel like you have to have an opinion on everything. You're playing in a poker game where you can't identify the sucker, which means it's you. The rule is this: can you explain your investment to an intelligent 10-year-old and have them understand not just what it does, but how it makes money? If you can't, you're outside your circle. Your homework: draw a circle on a piece of paper. Inside that circle, write down the industries or businesses you understand with absolute deep clarity. Be honest. For most people, that circle is very, very small. Now make a promise to yourself: you will never, ever invest in anything outside of that circle, period. Advantage number 6. You are constantly busy. You mistake activity for achievement. The unfair advantage is combining extreme patience with extreme decisiveness. Most people can't sit still. They check their stocks every day. They see a headline and they feel they have to do something. Buy, sell, rebalance. They're like a hummingbird on caffeine, constantly flitting from one flower to the next, burning enormous energy for very little result. That is not our way. We practice what I call assiduous patience. We will sit for years, in cash if we have to, waiting for the perfect pitch. The one obvious, no-brainer opportunity. Most of the time, the right thing to do is nothing, absolutely nothing. But when that pitch comes, when that one opportunity from inside our circle of competence appears, and it's priced at a ridiculous discount, we don't just take a small swing. We swing for the fences. We bet big. It's a strange combination. 99% of the time, we look like we're asleep. We're patient. Then for 1% of the time, we act with incredible speed and force. Patience, patience, patience. Then, sudden, decisive action. You are doing the opposite. You are constantly fiddling. A little buy here, a little sell there. You're making 1,000 tiny decisions that cancel each other out, all while paying transaction fees and taxes. You're acting like a day trader, which is a profession with a 99% failure rate. The rule: you should have a mental punch card with only 20 slots on it. That's all the investments you get for your entire life. Once you've punched all 20, you're done. You'd start to think very, very carefully about what qualifies as a punch, wouldn't you? Your homework: for the next 30 days, do not make a single transaction in your investment account. Don't buy, don't sell, just watch. Get comfortable with the idea that the default action is no action at all. And finally, advantage number 7. You are a human being driven by emotion. The unfair advantage is ruthless dispassion. Your brain is not your friend in the world of money. It is a 100,000-year-old machine designed for survival on the savannah, not for navigating complex financial markets. It is wired with fear, greed, envy, and a desire to follow the herd. These emotions will destroy you. Greed will make you buy at the top of a bubble. Fear will make you sell at the absolute bottom of a crash. Envy will make you chase what your neighbor is doing, even if it's a terrible idea. The herd instinct will make you feel safe buying when everyone else is buying, which is almost always the point of maximum risk. To win, you must systematically override your own nature. You have to be able to watch your stocks fall 50% and not panic. You have to be able to watch your neighbor get rich on some speculative nonsense and not feel a single pang of envy. You have to be rational when everyone around you is going insane. Look at the crash of 2008 or the COVID crash of 2020. The headlines were apocalyptic. The world was ending. The emotional, human response was to sell everything, to run for the hills. The rational response, the dispassionate response, was to recognize that you were being offered the chance to buy wonderful businesses at prices you might not see again in your lifetime. The people who made fortunes were not the ones who felt the best. They were the ones who thought the best. The rule: make your decisions based on a simple, written checklist, not on a feeling in your gut. Your gut is a liar. Your homework: write down the conditions under which you would sell an investment before you buy it. For example, I will sell if the fundamental business case is broken, or I will sell if it becomes dramatically overvalued. Write it down. Stick to it. This pre-commitment short-circuits the emotional panic that comes later. So there you have it. The 7 advantages. Invert. Think in a lattice work. Bet big on your best ideas. Learn from the mistakes of others. Know your limits. Be patient, then decisive. And be a machine of pure reason. Avoid the stupidity of trying to be brilliant. Avoid the stupidity of being a man with one hammer. Avoid the stupidity of diversification into mediocrity. Avoid the stupidity of making your own mistakes. Avoid the stupidity of playing games you can't win. Avoid the stupidity of constant, frantic activity. And above all, avoid the stupidity of letting a Stone Age brain manage your 21st century money. This won't make you rich in 5 years. Anyone who promises you that is a liar and a thief. But if you apply these principles with discipline for 30 years, you will be wealthier and wiser than 99% of the people you know. It's a simple, slow, and boring path, which is why almost no one takes it. If you've watched this far, you're serious. Most people clicked off 10 minutes ago to go look for a list of hot crypto tips. Good for them. Let them play their game. You're here because you understand that wealth isn't about finding secrets. It's about having a superior process. This channel isn't about hype. It's not about predictions. It's about timeless principles that work. If you want more of that, you know what to do. I have to go. There's a book I haven't read yet.